Hey traders, Raghee here. Welcome to Charts and Coffee for Thursday, August 12th, right? August 12th. Hope everyone's doing well. It is the 12th, isn't it? It sure is. So, well, first thing right off the bat, and we start off with the calendar. 8:30 a.m., about a half an hour ago, we got the PPI. And you'll notice the movement in the market that we've seen since that PPI was released. And of course, what we see is that the PPI showed that we were 0.5 higher than expected on the cost of finished goods. So usually PPIs, in an inflation sensitive environment, we saw what the CPI did yesterday when it indicated that we did not have as overheated from an inflation standpoint an economy. The market loved that news and started moving higher. Well, when the cost of the finished goods to the consumer is higher, in this metric we're talking about 0.5% higher than expected, you can see what happened to the market, most especially the NASDAQ and the S&P, which relative to the Dow are probably more interest rate sensitive. So here's a 5-minute chart of the ZB. This is your 30-year futures contract, and you'll notice that it started heading down a little bit. Yesterday, when Dallas Fed President was on CNBC, you might have noticed when the markets were really going crazy, we saw entire handle move to the upside in bonds as we saw that conversation about the pace of taper as it was happening on CNBC. You could see the markets moving, and we've taken back quite a bit, obviously, of that move. But bonds are in a holding position. But you could definitely see that the NASDAQ probably took this the worst, taking back the entire rally from 3 a.m. So the 3 a.m. rally, that's your European and UK rally. So as the European and UK markets together, Paris, Frankfurt, London, were open, 3 a.m. Eastern, you can see that this market launched from 14,985 to 1535, and then we've just basically taken that back. All right, so just erased that move almost perfectly. All right, so that's where we sit as we kick off this morning. Yet another inflation-based data. Oh, golly, turn this phone off. Yet another inflation-based data point moving the market. So this is going to be the way the markets are going to move. Job data points, inflation data points, growth data points, and all that's going to be how the markets interpret what the message of the Fed is going to be between now and taper, between now and eventual rate hikes. All right, so that is what we've got to kick off the morning. Let's jump on over to your questions and kicking it off. Hey there, Michael. Question about XOP. So most of the oil stocks, I will tell you right now, I am not interested in because, look, we just started getting some clarity on our long position in crude oil. But it's a little bit premature, I think, right now to say that we've got the kind of structure that we'd like in oil stocks. So XOP, I throw XLE into this, throw OIH. Now, what is interesting is we could have the beginning of a 1, 2, 3 happening. Something like this happening. So if we have a double red, and we see this in XOP, XLE, and OIH, we have a double red downtrend, and that double red downtrend's ready to not only break the swing high of the pattern, but also get through the 34 EMA wave, which is this area right here. Then we're in actually kind of an interesting spot for potential movement to the upside. So that's what I would say is right now most interesting to me in terms of what we want to focus on, which is possibly breaking the wave and clearly breaking the swing high of the pattern. Now, if that happens, it doesn't automatically mean it's time to buy. It just means that there's a higher probability that the downtrend that preceded the pattern is broken. And that also should ideally accompany down in here that the lower row of the JT multi goes yellow. So this lower row should go yellow. That'd be ideal. That would be the way I would set up oil stocks. And I would like to see crude continue higher. So until crude has really good clarity, it's tough to get the oil stocks, the crude oil stocks in line. So that's not just XOP, but, and by the way, somebody asked me yesterday, how do we brace for sector rotation? And I'll tell you what, if you want to, I don't want to say front run, but if you want to get a little bit of a, well, valid, but early start on the sector, in this case, XOP, but this would be probably better off an OIH or XLE because both of those are high concentration weighted ETFs. What I would say is you want to think about finding relative outperformers within that group. And if you can find that, then you've got the makings of one stock giving you some insight into where that sector could go. All right. Okay. Next up is, hey there, Suzanne. Thank you very much, Germany. Well, good afternoon, right? It's about 2 p.m. over there, 3 p.m. So thank you so much for joining us. Sure, mRNA. Well, this one's in a really mRNA is in a really strong uptrend, which has been parabolic. I think we had this question earlier this week, and the question was, can you buy it? So the danger of aggressive pullback buys in parabolic stocks is that parabolic stocks, when they do pull back, tend to pull back in a much more emphasized way, as we're seeing right now. Still a double green, hasn't even touched the 21 exponential moving average, which is sitting right there. That's your 21 EMA. Here's a nice volume ledge right there. Here's your wave. So yeah, in this area, it's looking like we could see that there's a little bit of a volume ledge right here, if you're wondering. In this area, yeah, we could start thinking about building a long position in mRNA on this pullback. Thanks for the question. So I don't know about hold, right? I mean, when hold is a difficult question to answer because I don't know where you're holding from, right? If you're holding from 480, 490, 510, no, I wouldn't believe it's a valid hold. Although for my process, it wasn't even a valid buy level up at those heights. On the pullback now, yes, buy. Sell, not even allowed, right? Not even allowed because double green says, Rag, you are not even allowed to short this market. So I think we're entering the buy zone. All right. Thanks for the question, Wynn. John asks, are QQQ a fade the market play? Seems to go up in the morning and then start to fade later in the day. You know, we do start to see patterns sometimes in the different indices and sectors. And right now, the NAS does look, well, stuck. And I'd say this is probably for the main reason that I'm seeing is the inflation question mark. You know, CPI helps the market higher. Today's PPI sends our markets lower. That's where we are sitting in terms of the confusion about what does inflation say about again, it's not so much when are we going to get the rate hikes. Really right now, it's about when is taper going to start. And I think it's really less about if and when taper is going to happen. That's a foregone conclusion. It's how quickly will they taper? What will be the pace of the reduction of the asset purchases? That's really it. If it's a slow taper, the market's probably going to be like, that's fine, because while the punch bowl won't be as spiked as it has been, it still will be spiked. So I can't say the NASDAQ is weak. Green grab candles. We have barely touched the 21, and we still have double green on the structure. I was actually thinking, and this is something I was setting up, is can we get down to the 21 exponential And could that coordinate with a pit bull low? Could we get something like that and just see the market get back to this level here, which is about 15,100, 1598, and retest the point of control. And so that was a little setup that I'd love to see. It'd be aggro. Anything from the 21 EMA is an aggressive but valid buy. The closer we get to the 34 EMA wave, the better. But as far as an intraday pattern, oh gosh, my friend, I try not to lock myself into those expectations because it may not be what the rhythm is to the market. I try to really just use the levels that we have in front of us to determine what I want to do. Yes, some days it seems to be that way. Yesterday, it clearly was one of those days where it's just been all over the place. Here's the thing. I think the takeaway and the answer is don't presume there's a predictable rhythm. And also remember, as long as we're moving sideways, the directional bias is still bullish because we're looking at green grab candles. But one thing you could do if you're trying to gauge the rhythm, don't look for a morning, afternoon rhythm, but look for the current day's levels and the reaction to the previous session's levels. That will likely give you a much better understanding of the when and the why, the trigger of that roller coaster that you're correctly observing. Yeah, for sure. Prabesh asks, the gold play, if it was any other ticker, I usually don't play. Oh, so yeah. So gang, I'm always going to tell you this. And this is where it's really easy to get locked in to something that I say. And then all of a sudden, when I make an exception, it's like, wait a minute, why are we doing it a double yellow? So when we got into gold, and I have talked about this a lot, but certainly it bears repeating, our primary focus is double green. It doesn't mean it's our only focus. Our primary focus is double green. The best, highest probability setups will be double green. You're absolutely right about that. But every now and then, there are sideways markets that make sense. If I look at my entire book of trades, I've got 2 sideways market trends on right now. Crude, the long in crude, and the long in gold. And everything else is a double green. So to your point, I don't want to make most of my book, really less than 20% of my book, less than a quarter of my book, in that area can be non-double greens. If the entire book is double green, that's perfectly fine. But sometimes I'm going to have non-trending markets giving me interesting setups, and gold and crude, by the way, were 2 of them. Before that, it was the fade buy in the Russell that was on the radar. So yes, if you find your book of trades starting to creep higher and higher in the yellow markets, right, we have a problem. But there will be times that we'll get into non-trending markets. It just won't be the dominant trend. And in gold, gosh, Prabesh, check out the free videos that I've done since the end of last week. Please do. If you're taking the time to check out Charts and Coffee, check out the free videos. They usually run about 5 minutes. And I actually outlined the levels in gold in the free videos. I outlined the levels in crude, both those double yellow setups in the free videos. So definitely head back on over to the Simpler Trading YouTube channel. I think you'll love the detail of those updates. Okay. And then if you have any questions after that, you know where I'll be every morning at 9. All right. Next up is charts and water. DJ says you're fasting. Oh, well, what about tea? DJ, I fasted before with cinnamon tea, which was a little rough, and bergamot tea. But good for you. Hats off, because that is no easy feat. That is definitely some mind over stomach going on right there. Kudos to you. All right, can we review Nvidia? Sure. NVDA. Nice double green. A little more volatile. Nvidia and Qualcomm have both been on my radar. They're buyable on pullbacks. Absolutely. They're buyable on pullbacks. And we're getting a pullback today, right now. And inside the 34 EMA wave, yes, that is valid. But look at the previous, take a look here. Look at the previous hit on that 55 exponential. Those kind of purplish, maroon, whatever color you want to call them, dots, those are simpler propulsion dots. I replace exponential moving averages with those, except for the wave. And that would probably be the bottom of the validity, the zone of where I would be willing to enter. And I would say you really should start around the 34 EMA on the close, the blue line of the wave. And so 34 EMA on the close, all the way down to 55 EMA on the close, I think is a really good zone to build your position. Maybe the position is a put credit spread you're building in bearish momentum. Maybe you're going to leg into a call vertical. Maybe like myself, which is what I do 90% of the time plus, is just a straight up long call. But regardless, the zone is exactly the same for all three of those strategies. Get the zone right. Well, actually, before even the zone, get the relative outperformance right. Get the watch list right. And then the strategy is going to be, you have a lot more latitude for a strategy that's going to work when you've got the watch list really focused on the kind of structure that's going to be most beneficial, kind of going back to the earlier question, which goes back to double green. All right. Is it worth building a long-term position in SPCE? So one neat way to maybe do this is with the ARC ETF. That might be a neat way to do it. Not just SPCE specifically, but play the tide, as I like to say, right? Boats and tide, that's the analogy that I've always taught, where we look at a group that are going to be affected by this larger niche or this larger sector index that they're in, and how those individual stocks relate to one another. It's really tough for a boat to fight the tide. It's got to be a significant structure in that stock to fight the overall tide. So usually we're just going to look at them together. So if you're talking long term, now I don't know what long term is to you, my friend. For me, long term is going to be somewhere in the vicinity of a 6-month minimum period, sort of a proving window, where if I have a trend, preferably on the weekly, that I like, or I'm trying to take advantage of sector rotation with what I call the Ferris wheel analogy, not building my portfolio, my longer term portfolio, my investing book full of chasing strong markets higher, but rather thinking about which markets right now are moving lower and could benefit from that rotation. Again, Ferris wheel analogy. Now, funny enough, on Thursdays, I do a macro market deep dive. So every Thursday, we do a slightly longer video and we do a macro market deep dive. And I cover things like this. Would SPCE fit the bill for that? Probably not until it gets down to about $20 to $16. All right. So again, define what longer term is. So you get an idea of what longer term is. And then if you've got a longer term time horizon, it makes sense to focus on a longer term time frame. So, it's interesting. A lot of confusion and conflict in the markets at an analysis or trade level comes from, two traders who seemingly have a similar, have similar attention to a market, but have contrasting views or positions. A lot of times that confusion can be solved by simply asking the trader, what's your time frame and what's your time horizon? And chances are that's where the analysis differs, not because one trader thinks gold is destined to be heading lower and the other one thinks it's absolutely heading higher, but you really ask them, hey, what's your time horizon? How long are you going to be in this position? And what time frame are you using to analyze it? If you get down to that level, you'll find that that's where the clarity comes from. All right. So just like that, gang, charts and coffee, that's a wrap. Thank you as always for being here for our sessions. I appreciate it. It's 9:20 a.m. Eastern. That means our simpler trading Rooms are opening. So if you're a member of one of the rooms, head on over. I'll see you all later today, this morning in the futures room. And I'll see you all later this afternoon in the options room. I'm going to go head on over into the Sector Secrets Mastery for a little bit this morning. But have a terrific morning. Thank you, as always, for being part of Charts and Coffee. I've got my Kraken mug today because, I keep sort of giggling to myself that the market still, market participants still think that they're going to release the Kraken on these markets, and I'm just not seeing signs of that yet. But anyways, be good to each other. I'll see you all tomorrow, same time, same station.